Hello guys, welcome to my YouTube channel once again. In today's video, we're going to be looking at about three pairs. We're going to analyze about three pairs, and I'll show you guys some of the pairs I missed opportunities and the ones that I made some profit, and the ones I'm still expecting the market to give me an opportunity to take some trades. So you watch this video from the beginning to the end. Do not skip it, so you get all the bits of information that will help you, all right, in improving your analysis of the chart. All right, so we'll start with this pair. This is step index 200, and this is the weekly time frame. So one of those things you have to look at in the market on any pair is their movement. All right, movement of a pair is very important for you to take note of. All right, for this particular pair, you can see what the market does on the weekly time frame. Each time the market wants to buy, it creates a series of consolidation here, like you can see here. Before, we had a very nice impulsive buy. All right, then the same thing happened here again. You can see another strong consolidation here. Then the market bought massively. Then we have another consolidation here that just happened. Then the market bought massively. And in each of these cases, you can see right here, the market created double top, double bottom here. For this one, there was also a double bottom here. This is the first bottom and the second bottom. Then for this one, we have something that looked like a triple bottom. Like this is the first bottom, this is the second, and this is the third bottom. So while the market is creating these bottoms, it's creating some consolidations, and immediately the market breaks out. If you look closely on this weekly time frame, the market doesn't really do a proper retest before it continues with the move. So if you study this, like, you will notice the consolidation like this on a higher time frame. Then you can always know that once there is a breakout, maybe you can just squeeze down to a lower time frame to find an entry to join with the movement. All right, now the market is going to buy nicely, like the one that happened here. You can see it, but if you want to mark this, will be the neckline. Then if the market can possibly come back to do a retest, then we'll see more buys. Although from what we've seen, there's been no proper retest on this pair that actually worked. Okay, so now let's go down to the lower time frame, because I spotted an opportunity there on this pair. As you can see, currently we have a bullish move here. The market has been buying since the month of September. You can see the nice buys up to the current date, and the market at this point is kind of consolidating on this time frame. All right, this is what we see on this time frame, and this is that neckline we noticed on the weekly time frame that was broken. All right, so if we go down to, at this point, we do not have a clear let's just mark this neckline for the sake of marking. Just mark it there. So at this point, we do not have a clear opportunity to take the entry, take any entry, because we want to do proper analysis. We like marking from the recent low to the high. Then we'd want to mark from here to here. So our entry zone or golden zone should be where we have this neckline. All right, so but if we go down to a lower time frame, like the 4 hourly time frame, if you've watched the videos I explained about chalk or understanding chalk, that change of character, you should understand that the market, if you are spotting a change of character on a particular time frame, then your analysis should be, restrained, or should be confined to the structure of that particular time frame, except the market structure of a higher time frame, except the market respect the same market structure or the same structure um between the lower time frame and the higher time frame. Like if the same highs and lows that we have on the daily time frame is the same thing we have on the 4 hourly time frame, then if you have a chalk on the 4 hourly time frame, it's the same thing, it's going to work. All right, but if the lower time frame has more highs and lows, then you have to take note of the ones that represent that of the higher time frames. Anytime you take consider, you see change of character on the 4 hourly time frame. If you do not understand, just check. I think there's some videos behind. I think you will find it. The title should be understanding change of character, something like that. All right, so now on this particular pay here, as you can see, on this time frame we had a change of character. For those who don't understand the market structure strategy, we mark this from here to here. The market sold nicely to the golden zone, and you can see the rejection, and it started moving. Now, one of the things you also understand is that most times the market may not may go below the golden zone. I've explained for some of those that have enrolled in my mentorship that the market might skip the golden zone and decide to go down, especially if there is something that is pulling the market down. One of those things can be an order block, it can be a demand zone, it can be a fair value gap. Like this one here now, it was this particular this other block right here that pulled the market down. So the market had to come down, as you can see, on kissing the other block zone. It rejected immediately and bought massively. It bought massively. Obviously, did not have any opportunity because I noticed here, I think somewhere around here, I should go to a much lower time frame to see where I would have had a re-entry, but it did not. Market didn't give me the opportunity. I think it was on the 5 minutes time frame. Sorry, 15 minutes, where I tried to see if I can get an opportunity to enter the market, but I did not see it. Did not play out. All right, because let me see. Let me see on the 15 minutes time frame. Okay, I expected the market to come back to this zone down here, this zone, oh, sorry, this zone down here. After I saw this to be a change of character, then had this sorry, lower high, then this to be change of character at this point. Then I was expecting the market to pull down here, or maybe somewhere here before I can take an entry. So since it did not do that immediately, I left the chart and I still expected maybe after sweeping this high, it will still pull back. You see the market moved massively, so I missed this opportunity, and there's no problem with that. At least I understand what I did. I didn't lose any money. So you can see that this strategy works so well. So the only thing is this, personally, I like trying to curtail or minimize how much I am risking for a trade. But if you may want to try to risk higher than I do, you can just wait. Once the market gets to your zone, your desired zone, you can take an entry, but ensure you do not risk too much. Just be careful with how much you're risking. Like if you notice the market has skipped the golden zone and is getting to this other block level, you can just set a sell entry, sorry, buy order limit. Like once the market gets here, it triggers, then you set your stop loss below that little zone. You see how much you're risking. It's going to be too much. All right, it's going to be too much, or maybe you can go down to much lower time frame to see if it will still respect it. All right, so but if you know you have a good account size, you can just risk it, and in many cases you'll be profitable. In many cases you'll be profitable. Like now you can see, if you had taken an entry from there, this would have been about $124 profit, and this is a minimum lot size 0.1, risking about $34. All right, it's still okay. It's still okay. But if the market does not, because I believe in taking my trades, I always want to see a change of character and a pullback. So if the market doesn't give me the change of character and then a pullback, or the market doesn't give me a consolidation, then a break and retest, then there's a very high chance I'll miss the trade. I'll miss that opportunity, and there's nothing wrong with that. The idea is trying to be disciplined. You understand? Be disciplined on trading. Then try to just respect whatever is your entry, whatever you have as your entry criteria, the conditions, confirmations. Make sure that is what you use to try to take your entries. Do not rush to be taking entries based on what you've seen others do. Ensure you have what you always want to see, on the chart before you take an entry. And if you do not see it, please, you will not die. Just skip, allow the setup to go. All right, this is just for this pair. So as it is right now, there's a chance the market can still pull back, because if you look at the market on the daily time frame or the weekly time frame, you can see it's in a strong bearish move. So the market can still pull back from here to maybe do a retest down. So if that happens, then we can find an opportunity to take the buys again. And although currently you can see the market is giving us a structure that looks like a double top right here. This is like a double top here. This is a first top, this is a second top. So if it gives that if it continues selling, then comes down to this zone, because there's a very high chance it can sell back to this zone, then gives us a confirmation. Maybe on getting to this zone, it starts giving us some confirmations that it wants to continue return, that is continue with the buys, then we can take a buy from here. Or if it skips here, then continues down, then you can then still check. The one I'm seeing here, there's a very high chance the market won't be moving smoothly. It might be creating very nice lower highs and lower lows on the 15 minutes time frame or the 5 minutes time frame till it gets down to this zone. So all you have to do is to just wait for a change of character, then before you think of taking an entry on this particular pair. All right, so that's it for this pair. Then the next pair we're going to be looking at is let me quickly trace it. It is crash 900 index. All right, crash 900 index is one of those pairs that is volatile, but I want to show you guys something. For those of you who like trading boom and crash, if you like trading boom and crash, then you should watch this particular aspect or this particular video and open your mind to learn. If you want to learn how to trade spikes, trading spikes is one of the easiest ways to be profitable compared to trading against spikes. All right, because if you trade spikes, you know how much you're willing to risk, but if you're trading against spikes, you cannot be so sure of how much you're risking, because you can decide to set your stop loss such that you'll be risking $2, but when the market spikes, it might take up to $5. All right, but with trading the spikes, catching the spikes, you will just lose whatever amount you're ready to lose. All right, so if you look at this structure, let me show you how you can analyze to catch the spikes. Then for example, first of all, you identify the direction of the market. Then let's say we on the 4 hourly time frame, you will spot a change of character. You see we have a high here. This is the last higher high, then the last higher low, then this is the final higher high the market created. We had a break of structure here. Then for that reason, this is where we had a change of character. Let me use the crosshair tool. You can see this where we had the change of character right here. Okay, so now what we are looking out for is a chance that is an opportunity to catch the spikes, because the direction of the market is bearish. As it is, the market has there's a shift in market structure. So all we want to see is the market to start buying. The market has to buy up to this, at least this level here, around here. So we have to get a zone to mark this, a rectangle to mark out this zone. So we wait for the market to get to this zone. On the market getting to this zone, there is a very high chance the market will sell from that zone massively down. So all we have to do is just to wait. Just be patient, wait for that to happen. You can still take the buys. You can still take the buys if you are so in a hurry. You can still take the buys. Right now we have a consolidation here. There's a consolidation here on this 4 hourly time frame, so you can just wait. Maybe the market breaks and closes above this zone, then you can wait for a little pullback, then you take the buys up to that zone up there. All right, you can still make some massive profit, but if you want to be on the safer side, just wait for the market to buy to the zone above. Let the market buy to this zone. If the market buys to this zone, give you the confirmation it is ready to sell by giving you some kind of maybe consolidation or change of character on the lower time frame, or the consolidation on a lower time frame. Then you can just get ready. Mind you, if you're trading boom and crash, you can always go to as low as, especially if you're trading the spikes, you can go down to as low as the 5 minute or the 1 minute time frame to get your entry, and it makes most sense because you will not be losing so much, you will not be risking too much. All right, so once the market gives you that opportunity, guys, just make use of it and then wait for the market to start selling, then you join the trades. There's a very high chance you will sell below here, and if you're taking the entry from this place with the minimum lot size, which is 0.2, you stand a chance of making how much? This is about $63 or $65 profit, only getting to this zone. But we feel the market will go longer based on what we have here on the chart. If you look at the daily time frame, the market has a long way to go. It has been buying for a very long time, so it has a very long way to go selling. So if you're able to catch that entry on time, you'll make some very good profit with this particular pair. All right, so remember to always go to lower time frames to spot your entry correctly to avoid risking too much. The higher the time frame, the higher your stop loss. Then the next pair we're going to be looking at is this pair here, VIX 75 1S. VIX 75 1S. This setup was spotted by one of my students. Then if you look at it on the daily time frame, you can see that the market is actually bullish. We have a bullish movement here, and then the market came down to our entry zone. Like right now, if you mark this, you'll see we have the market at about the golden zone. Okay, the market got to the golden zone and then retraced, started buying again. Then this is the zone. So You can see the consolidation the market did, then finally it broke out. All right, so we are still waiting for a pullback because as it is, we missed the buys. Like the market didn't give us the confirmation that we needed to take the buy. So as it is, I'm still expecting a pullback from maybe the current price where the market is. It can possibly pull back from here. It can start pulling back from here. Let's look at it on the 4 hourly time frame. So if the market can pull back from there to come back to this zone, then there's a higher chance of the market buying to continue with the bullish move, because based on what we see on the daily time frame, the market is bullish. This is what we have. All right, this is what we have. This is what we have, and then we have these two. Okay, the market can still continue with the buys and then make some good profit. So all we have to do is to wait for that opportunity, and also where the current price is, you can still find an opportunity for a sell. You can look for a sell opportunity from there by going down to a lower time frame. Now this is a 4 hourly time frame. You can see the candlestick that is rejecting from that zone. Then we go down to the 1 hourly time frame. Just go to different time frames, spot what is happening. Now look at here on the 5-15 minutes, we have something that looks good. We have a change of character on the 15 minutes time frame. As you can see, this is a high, this is a higher high, this is a higher high, and because of this high, this is our recent higher low the market created. So this is a change of character, and the market is indicating a sign of impulsive correction here on this time frame. So we want to see the market moving back up to, let's say even up to here, this particular zone. If the market can go up to this zone, then it would be nice to take a sell from this level. Set your stop loss just above that zone and watch out. Now, if you look at this clearly, we do not have too many highs, so meaning the market can sell up to down to this level very nicely. So just when you take the entry, do not be scared. Ensure you are risking what you can afford to lose. But the chances that you make some profit from this particular setup is very high, guys. It's a very high probability trade setup, as you can see. I don't know when you're going to be watching this video, but whenever you're watching it, make sure you learn something from it and try to practice this on other pairs. All right, I will see you guys in my next video. Like this video, share it on in the comment section, and subscribe to this YouTube channel. Join our Telegram channel for more information. The November mentorship batch is loading. All right, so still preparing. If you're interested, send me a message, but it will be launched officially very soon. All right, I'll see you guys in my next video. Stay blessed and peace out.